Welcome back, traders and investors. We have Anne-Marie Baiynd on the line here. She is a financial analyst and author of A Practical Guide to Profiting with Technical Analysis. Anne-Marie, how you doing today?
I'm doing well. I hope you are.
Yeah. Are those half a dozen kids you have there behaving?
Half a dozen's a little shy, but yeah.
A little shy. Okay, all right. Well, let's move on to the markets here, and first let's talk about your book, A Practical Guide to Profiting with Technical Analysis. Could you just give us a quick preview of that?
Well, the practical guide is really a stair-step process of the system that we have here that we look through the market, mostly technically, but also from just a common sense perspective. And it's a very nice, easy walkthrough. There's a companion that's got a workbook that walks through trades that I've actually taken over time and see how they work. I think for analysis, we first need to understand that there's a general road that you follow and a general set of rules that you follow. But then after that, you really have to interject a little bit of common sense about where buyers and sellers might be sitting. And so the whole book brings all of that together, looking at the market not so much from a compartmented place, as technical analysis often is, but as the whole thing, as part of technical analysis, looking at the charts and watching buyers and sellers, and then understanding a little bit about yourself, because that's really, really important. We make decisions, and a lot of times we have drivers that we don't really know what they are. And so we focus on that too. It's a great book. We've sold a lot of copies, and it's because it's really simple to read and super straightforward.
So that's very interesting that you have the book, you have the setups, and then is it like one of those workbooks that you had in like elementary school where they give you the quiz,
Exactly.
but you don't put the answers in the back, do you?
Well, actually, the answers are there since they're live
Uh,
trades
oh, they're
for
live
me.
trades. Oh, okay,
Yeah,
okay,
they were live trades that I took.
okay. So let's talk about your process here. I know you like to lean on the technicals. Can you tell us what kind of charts, what time frames that you use for your charts, and then also the typical time frames for your trades?
Well, I trade both intraday and swing.
Okay.
And so I will address the swing very quickly. What I like to do is look at the daily and the 4-hour charts because my swings normally last anywhere from 3 days to 3 weeks. I don't normally keep them any longer than that because I run short cycles. And so I will look at those two time frames. Once in a while, I will go to the 1 hour to help me uh, time the entry maybe a little bit more appropriately, but for the most part, that's what I use. Now, for the intraday, interestingly, I also use the 4 hour because it's sort of like the undercurrent that helps me understand what's going on in the market. And so that 4 hour chart will give me a flavor of prevailing trend so that if I go to the 1 hour and I say, you know what, I'm going to trade this for the next 2 hours or so, and I'm going to use maybe that 15-minute chart to help me time my entry a little bit better, I'm going to have to understand whether I'm taking a counter trend trade, which I have to have a very tight leash on, or a trending trade, which I can give a little bit more room, right? One is a well-behaved dog and one is not. So the counter trend trades always need that very, very tight leash just in case the prevailing trend takes over. It can knock me out of the trade very, very quickly. And so from that perspective, those are the time frames that we use. And then after that, it's really simple moving averages. And the 50 is very, very important no matter what your time frame, the 50 simple moving average is, with the daily being super important. And then I use the stochastic momentum index, which is a momentum indicator that was developed by a guy named William Blau. And it turns out that it has extremely tight lags, right? Like a moving average will have quite a bit of lag, and if it's a fast moving average, it'll give us a lot of false triggers to go long or short. But with the SMI, as the numbers expand and we get a wider range of what's happening, the lag time in that momentum index, because it's such a beautifully created technical, gets very, very small. So you can see the changes extremely rapidly. They look like the chart motion without all the noise that you see in the candlesticks.
So even though you do intraday and day trading, you don't look at anything shorter than a 1 hour chart?
No, I look at the 15-minute. That's
15 minutes.
about it.
Okay. Because
Yeah.
that's what I try and do. I mean, I try not to go anything shorter than the 15. I mean, I've sat with a lot of different traders, and they're looking at like a 1 minute, point and figure
Yeah,
chart, and like
so
my
tight.
my my heart is like pumping. Watching that thing.
Exactly.
It's just like. At least on the 15-minute, you have brackets, you have people that, even some intermediate day and swing traders, they'll wait for the first 15 minutes of trading to make moves and stuff. So I think that's important because I think when you start getting into these 1 and 2 and 5 minute charts, I mean, unless you're just scalping the daylights out of the market, then, that's another thing. But, really when I do my levels at night, I like to look at the dailies. If it's made a big move, I'll look at the weeklies or the monthlies. But that's an interesting point. So are you in the actual equities all the time, or do you play the options market?
I actually do both. It depends on what it is that we're looking at and really what the option chains look like. For instance, I tweeted something out about jazz this morning. Jazz has pulled back really, really hard, and it's now sitting just underneath its 50. And so if it rises above the 50 and holds, it's going to make a pretty good long. The problem is, sometimes if you look at the jazz option chains, the bid asks are really wide. And if I'm only looking for maybe $1.50 or $2, I'm going to get a tremendous amount of
Flip.
slippage
Good point.
if I focus on the options alone. And so sometimes when the bid asks are wide like that and I'm just looking for, $1.50 or $2, I'm just going to trade the chart.
Okay. All right. That makes sense. All right. We're coming up to the heart of earnings season here. Piper Jaffray
Mhm.
saying buy Apple ahead of earnings. Any take on Apple, or let's go? Well, today you got Apple, Netflix, CMG. Is anything on your radar in those stocks?
Actually, both of those are on my radar. For Netflix, particularly, the market makers have got about a $30 move baked into the price of the options. Now, my measured move analysis says that the move is likely $26, and it could stretch out to 40, but it's going to come back down into that $26 level. So we've set up an iron condor sitting on the outsides of what the market makers have established as the move there. If you want to trade it intraday, we're looking for that mark above 450, 356. Again, if you trade options on the day that the charts are going to report, you really have a lot of volatility there. It's just an added risk event if you're not paying attention to those chains very, very carefully. As far as Apple goes, Apple is caught in this gigantic grinding space between 93 and say 95, 96. It looks like it's going to go forward. It really, really does. But it's going to have a lot. If earnings don't absolutely come out and knock the socks off of the chart, it's going to come, whatever it's going to do, it's going to pop, drop, whatever, and it's going to come right back into that range between 93 and 96. There's a measured move there also that gives us about 4 points from the top of the range. So if it actually, drops up over 98, we're maybe looking at 102
Wow.
at a top end there. But that is really it. This one's messy, very, very messy. Since the split came with Apple, the nature of the chart has changed. It doesn't trade the way it used to. And that's because of the participants, of course. That's why a chart trades the way it does. It's because of the participants that are generally there. And the whole pool of participants in Apple had changed, and so it doesn't trade like it used to. So it's been kind of a new learning event for us here as we try to figure out what the new rhythm is based on the charts.
That's an interesting point. Just going back to the Netflix here. Now you're putting on the iron condor, so obviously you're buying and selling options, involved in that. Do you wait till the end of the day so let them just take all the juice out of the both options for the day, or do you are you gonna look to put it on or leg in it during the day?
Yeah, we put it on. I try to make it really simple for my members. So I put the note out, and then, they put it on during the day. They put it in as a limit order, and then if it doesn't close right away, they just leave it there for a few hours to see if it'll close. So if we had more mechanical, if I had more mechanical control about helping my folks get in at exactly the right space, and they weren't, with jobs or whatever, it would be a much better way to leg into those trades, absolutely. But what I try to do is make the procedure as straightforward as possible for them, and so I just put it out and go, here's what you got. I like the back ratio. I love trading the back ratio during earnings, and today we've got a back ratio set up there as well. So
Okay.
we've got the iron condor that's short for collection of premium, because I think the market makers have to stretch a little bit wide, and then the custom back ratio that allows us to capture, additional gains as the chart jockeys around.
Okay, we've had Anne Marie Baiynd on the line. She's a financial author, financial analyst, and author, a practical guide to profiting with technical analysis. I love the way you break down the markets and you try and do it in simple and easy to understand terms. And sometimes people make the market too difficult, try and make it too complicated. I like your method of explaining things and breaking things down for traders. Great having you on, and we hope to have you on again.
Thanks, Joel. Very much appreciated, and enjoy the show. I really do. I really enjoy the show.
Okay, thank you.
All right, take care. Bye-bye.